So what was it like
Appreciate
to raise money? Give us perspective on sort of the amount of capital that's in the space.
Well, we have not started raising money yet, but I think the environment, as you know, right now for raising private equity capital is actually quite good. And the reason for that is simple. The private equity industry has actually delivered great returns, great cash flow for investors, certainly over the last 10 years, which has been a very volatile and tough period for investing. And so investors have shifted capital to the alternative space where they're getting increased returns, and within the alternative space into private equity. So I hope and suspect that will continue for a while. And I certainly hope if and when we start fundraising that will continue.
So, Alex, talk to us about putting together a firm at this moment on Wall Street. You know, you're hanging out a shingle at a time in a very competitive business, but also at a time where you've got a lot of experienced people out there who may, want to test their entrepreneurial chops alongside with you. Tell us about that process.
Sure. Look, I'm very energized and was very excited to start the firm. But as you said, this is all about people. We don't make widgets, we don't make pipes, and so this is all about putting the right team together, forming the right culture. And so when I started thinking about the vision of the firm and the team, I cast a pretty wide net and started looking at people at different firms. And so spent a lot of time looking at top talent at a lot of different organizations. And so this has been a journey.
Right.
And so putting the team together is a real process.
Right, and I mean, and you've drawn people from your old shop, KKR, but Carlyle, Warburg, Pinkett's, et cetera, so some really brand name shops. One of the interesting things, too, is you're starting right out of the gate with a philanthropic arm. You hired a managing director who used to work over, I believe, with Bill Ackman at Pershing Square. What's the thinking behind this and in terms of kind of really from the outset doing the doing good by doing well model?
Look, I've always believed that in addition to generating great returns for our investors, we have an obligation to serve our communities as well. And I've always believed philanthropy is part of my day-to-day responsibility. And so I want to have a culture and a firm that believes in that. So setting up philanthropy was really part of the initial mission of the firm. And so bringing on Georgia, who has been a terrific addition to the firm right from the start, was a critical part of our mission. So setting up philanthropy as well as our investment mandate was pretty important.
So to drill down a little bit more into the overall credit market, leverage loans, obviously a topic, whether you're looking at Wall Street, big bankers, talking to Congress or whatever, what have you. We had Rick Reeder of BlackRock on yesterday. Here's what he had to say about the risks and opportunity in the leverage loan market.
I do think that there is some overspending, some weaker credit conditions, and we see it in some of the middle market lending that's taken place, is over the top. So much money has been raised that's pressing into levels and no covenants and no structure, and quite frankly, some of the banks are pulling away from it, saying, you know what, you want that business, you can take it. So I think, quite frankly, some of it's been overdone, but do I think private equity is in the lending business for the long term? 100%.
What are your thoughts on that?
Well, I do think that private equity will be in the private lending business because the banks, particularly the larger banks, have in many ways withdrawn from that segment of the marketplace, at least at this stage. Whether that's an overheated market, I think you really need to look at that on a credit by credit basis. I think it's, in my humble opinion, it's a little overgeneralization to say that entire market has overheated. So it's really a credit by credit analysis. I would say overall leverage levels have moved up, not just in the small, medium-sized market, but even in the larger market. So that's an overall statement, and I think you need to be cautious, not only because of the leverage levels, but because we're likely to move into a downturn. So it's not just the leverage levels, it's what's the economic cycle we're in, and I think that's, to me, a bigger concern rather than just how large is the leverage levels.
And just briefly, where are we in that deal-making cycle? Are there going to be good deals at the right valuations to be had soon? Because people talk a lot about things being pretty expensive right now?
I think the valuations are very high. And so I think we do need to be quite cautious, and I think we need to be quite selective. We are also at the late end of the cycle. So for exactly that reason, I think we need to be very, very selective. And I think we are, I'm not smart enough to know exactly when, but we're probably a year or two away from a downturn.
Right.
For all those reasons, I think this is time to be very selective and very cautious. Obviously, there are going to be some great opportunities, but I think it's more time to be selective.
So what's top on the list?
Well, right now I'm still putting our team together.
Sure.
So I think.
But what sectors do you think when you're going through, like, all right, I'm going to like really drill down here?
Look, I think again, consistent with our thinking, you want to look for economic areas that are more recession resistant. So healthcare, to me, I think will be a very interesting area for us. Areas within technology, particularly software, tech-enabled verticals, will be very interesting. Areas within financial technology and financial services will be quite interesting. And so I think those are the areas we're focused on right now. Over time, we will broaden our view, particularly as we move out of a recession, but I think we'll have our hands full for the next several years looking at those segments.